Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, October 18th, 2016. I'm getting this out probably about 20 minutes before the bell sounds. I have a doctor's appointment shortly after the close, so I wanted to get something out beforehand. We're having it was a pretty decent day today, but if you just, take a look at the 15-minute will show us better on it. The biggest move took place at the opening trade, and we've seen that happen over and over again, and every time it fails. We saw it here and it came down, we saw it here, came down, and it's one of the things where I'm scratching my head on why the Bulls continue to try this this gap up approach to move the tape higher, because it's not working. It hasn't worked, and as a matter of fact, it's one of the trades right now that is batting 100%. Is that if you short the opening gap, you've made money, and is it going to happen this time? I believe so, but I don't know the roadmap it's going to take. That's why I haven't really put anything out as far as taking any positions. So you can see we ran into some resistance here. This is on the 15-minute chart, but we don't really have any bearish divergences in place. You can see where we made the high was where the high was there. Does it have to have a divergence? Well, this gap up didn't have one. It failed. This gap up didn't have one. It failed. So we may not need one. And what you'd want to do is, whenever it's we don't really have any clear sell signals in place as far as with divergences, I like to take a smaller size position, and then if they do try to gap it up, and so the position would be on the downside, short side. But if they gap it up, then you probably look to add a little more up near this 2149. So you're really going to be averaged in within a 5-point range. And then what you do is you just kind of put your stop, somewhere around here, and let things play out. Because if it breaks above this area, you could even go pretty tight on it and say put your stop at 21, somewhere in the 2154 range. And if it gets above it, then there's a chance that they're going to come up and start closing some gaps. But if it's going to do what every other gap up has done, and that's fail, you probably are going to have a pretty good trade, because the bare minimum that this is going to go below is 21.26. So that's we're talking about 14 points to the downside, and if it takes that out, then we're looking to come down and test these lows or even break them again. So you can, like I said, take a small one. I'm going to take a small position right here, and if it ends up moving up tomorrow, then I'm going to I'll lay in another one here, and then I'm just going to really put my stop around that 2155 level. And if it works, it works. If not, I'm going to get stopped out, and that's it. But I think it's a decent little setup right there. But there's nothing really bearish about this. I'm just saying, because of the gap up and what's happened previously, that they don't really give you a chance to get in on the short side. They usually fail right away. So if somebody wanted to do it, they do it. But really, what the Bears have to do is probably get it below this, anywhere from the 2134 down to the 2127. If they lose that, then most likely these lows are going to be taken out. But we're pretty overbought right now. You can see the MACD is actually rolling over. And like I said, in this area here, it may not be a bad place to take a really small position and see how we open tomorrow. 60-minute chart, you can see we're right at the midway range here. We ran into, let me just stretch this out a little bit. I think we ran into a moving average. I think we're right a little bit we made it just above this one. So if they pop up, we're probably going to see it come up to this the 2149. That's why I'm saying if you take a small piece here and it does pop up, this is where you really want to be. You average in your second one, and then put a stop above this pivot, which is a 21.55, and you're not really risking all that much. It's only going to be about 9 points on the S&P, and that's less than 0.5%. So you have a really really tight stop in place, and it'll be worth it. But you can see the SMI is neutral right here. If we go to a daily, we're in the area that we've seen some lows being made, and like I said, that even the trade that I'm saying right now on the short side, it's a trade. It's only going to be. I'm not looking to hang on to anything that long. I just think we're going to have a really choppy market heading into the elections. But these bearish divergences, it would have me thinking that we are going to have a larger drop, and we may get that going into the elections. And from there, find support and then rallies up until the year's end. We have to, kind of wait and see on that. But this has me just really nervous to be looking to jump long right now. But you still have to be selective on shorting, and you have to be quick and take your profits when they come. So that's really about all I have right now. Like I said, in this area right now, it's trading at 21.40. If you could take a piece, and if it runs up to here by the close, which I don't think it's going to, but if it opens here tomorrow, then you take in a second half and then just put a stop here. So with that, that's pretty much all I have right now. Enjoy your night, and I will talk to you guys in the morning.